Welcome to StockMarketFunding.com. It is now 5:27 a.m. on a Friday morning on an options expiration. Retail public has to pay a price again. That's what they enjoy doing to themselves. They love to trade options. They love to read options books. They love Gigma. They love Gamma. They love Black-Scholes. They love it all. But guess what? What they're really going to love this morning is the punishment that follows from that kind of operations. And basically, once again, as many and hundreds of times over and over and over, a true market maker in the options pit is the wholesale buyer. So as everyone enjoyed that 560 call going into Google's earnings yesterday, naturally they didn't sell it. Ray, give me a bid at 1550 on the May 560 call. And let me tell people, whoever do view the tape, that's the best bid. Yeah, they closed at 43.10 by 44.20, but you know what I enjoy doing the most? Is if you watch our videotapes from yesterday, how we sold it. We bought the rumor, we sold into the news, we cashed it out, and now we get the opportunity, as everyone else is very disappointed on a Friday morning, and we're quite happy this Friday morning on options expiration. And if you're tired of the results that you've had, well, then take some responsibility and accountability and get out of your own self. Get out of your own thinking of what you think it should be. Here's the reality of what it really is. And let that be known. Okay? And remember one thing. Talk is cheap. Show me the action. Show me the money. Show me the analysis. Show me the risk management. Show me everything that you would like to have. But, well, a lot of people don't. And basically, Google closed at 595 yesterday. We sold into the strength. You got lots of videos on Stock Market Funding, dailystockcharts.com. It's all there. All the reality, all the earnings reports, everything that you could learn from, free of no charge to you. Ray, bid me 1550 on a 560. 1550 on a closing price of 43.10 by 44.20. On a 560. 595. 5 contracts to start with. And that's a May. Now, people, we are going to go to another contract. That's a May. All right, on this tape here, we already had our logo on here. Here's a nice call for April 4/17. Strike price, 560 call. Expires today. SMF Pro traders are going to be able to buy this 560 call that had a great run on a weekly chart all the way up here from $15 all the way up there. You think people sold it? Nope, they didn't. Why? Well, let's talk about a little bit about you people. Not my SMF Pro trading students, because they're not taught to think like this when they get here. Their thought processes are changed. But we know how the little greedy minds work. And we know that greed has to have a form of punishment. Because the trade management was to sell into the strength. Buy the rumor on Monday and sell into the report. And that's exactly what the SMF Pro trading students, senior traders, everyone alike did here. And if you're in doubt about that or denial, then go look at yesterday's videos. Those trades were recorded live, and that's how we operate here. Now, I'm going to give bids right now, Ray. And I'm going to start 5 at $6.50, 5 at $8.50. That's the best price. Whether it hits that on that big gap down yet or not will be determined. But it is the best price for right now. And that's the way it is. Whether you like it or not. And it don't matter what you think in your mind. you're going to watch money being made, and it expires today. And the SMF Pro Trading students, once again, they get to be the wholesale buyer, while the public, 1,447 contracts were being traded in the money, they get to have a rude awakening. And rightfully so. Here's a 630 call that SMF Pro Traders sold yesterday. 3,200 more bought. It's a 522 630 call up and out of the money. We bought it at 310, 320, and we sold into that move, and we took our profits. Why? Because buy the rumor, sell the news. What if? That wasn't the point. The point of it is that at SMF, you're taught about inflated contracts. These are inflated. And inflation happens to go down into the deflation, and that's where these students will be buying this contract. I will give a bid on this call contract, that same 630 call that they owned, at 50 cents on the 630 call. 50 cents, it's a trade, it's not a hold on that 630. Just because they had owned it at such a higher price, I think that they can bid it at 50 cents and get a strap back. That's the trade management on options expiration. And once again, we really enjoy the fact that we don't ever want to see you be buying options and calls and strike prices and this and that. And, you know, earnings is a very tough part of this business, and so many gimmicks that go into this, folks, is that, you know, the odds of you making money are 10%, and all of the gimmicks and everything that go in the market, it's 90% against you that you don't make money. And the thing about it is, our compassion for you, if you ever come to our free 5-day trial, you could sit in here instead of watching a video, you could actually participate. And you could really see all the various different things that go on. And one thing that we would like you to know, that at the end of every day, that you're very important, and that you deserve the right kind of education and the right kind of person behind you. And the thing about it is, once again, markets are very manipulative, and with our risk management skills, we have over 150 proprietary. We have a brand new SMF Pro Trading platform being designed for people that can operate within the risk of the market and actually make a living. And there's things you're going to have to learn. But anyway, options expiration, I've given the bids. And that's the way it is. And they'll probably cut her on down to at least 12.5 by 15. And it's an in-the-money call still with a bid at 6.6. So basically the way the trade will work is that call will hit the bottom. It'll go up real quick. Then it'll peak. And then it'll probably come back down. And we have all day to get back in there. And that isn't the only call that we're going to be looking at. We're going to be monitoring this 570 call that was in the money. And that 570 call expired today at 28 by 29, and I'm given a $3.50 bid for now. And SMF Pro Traders are all listening. And this is the way it is. So, hey, welcome to Options Expiration. There's lots of things that being an actual operator, a market maker, between the bid and the ask, wholesale, retail, inflated, deflated, all kinds of things you learn how to buy.